along to the Property Academy podcast. I'm your host, Ed McKnight. It's our show. We're talking about the battle of the cashbacks, or the battle of the banks, I should call it, because we have seen competition heating up at the main banks in New Zealand. Oh, they're coming out with all sorts of stuff. Cashbacks, different type of loan products, special interest rates for certain types of loans. We're going to tell you all about it today and why this is happening. But first of all, Andrew, explain for us all, what is a mortgage cashback?
So basically the way a cashback works is when you draw down the mortgage, they give you some cash back. So basically... No good. So basically, you'll just get a lump sum payment paid to you to help you out with your setup cost normally.
And so, for instance, let's say you take out a 500k mortgage, 1% cashback. What do you get? $5,000 in your account. Now, let's talk about what we are actually seeing out there in the market before we get into some of the pros, the cons, and things that you need to look out for. First thing, we saw ANZ come out and say they're going to give a 1% cashback up to 20k. Now, 20k was the headline that a lot of people would have seen. Now, you only get 20k if you take out a $2 million loan, and most of us aren't taking out $2 million loans, but 20k is a large amount, and certainly larger than what we would see in a normal time in the market.
Go back in the bank, back when, in the days when I worked at the bank, the BNZ's maximum cashback was $500.
No.
Yeah.
Well, that was probably when a house only cost $1,000. But, and we'll talk about what's usual in today's market as well. But I do want to mention with this BNZ promotion, it does end in August. So if you're watching this video or listening to this podcast in September or December of 2022 or beyond, you do need to know that these will all change and are subject to change all of the time. At KiwiBank, similarly, I saw that they've currently got 1% cash back again, up to $10,000. So it maxes out once you take out $1 billion loan, but 10 or 20 grand or whatever it happens to be, 1% cashback is very, very large. What other things are we seeing from some of the other banks?
So Westpac have got an offer for first-time buyers. So if you're a first-time buyer, you go in the draw, if you take a loan with them, to win 5 prizes of $50,000. Massive. $50,000. Imagine the difference that makes to a first-home buyer.
Oh, it'll be massive for the people who have taken that out. They'll be able to pay down their loans.
ANZ have got a first-home buyers cashback of $3,000, and that's also available for some new build properties. And they also have just brought out a recent one called the Good Energy Home Loan, and you can borrow up to $80,000 at 1% interest rate for 3 years, which is really cheap. And this is if you want to use the funds for heat pumps, insulation, double glazing, solar panels, electric vehicles, and some other things.
I think the electric vehicles is the big one that people are going to jump on, because then if you're thinking, well, I could take out a personal loan if you needed money for a car and pay 11% or 10%, whatever it happens to be, but you combine the 80k at 1% for the electric vehicle plus all of the other rebates that are currently available. And it's pretty attractive.
One of the things, though, that's interesting about this is that if you're not with ANZ, they are going to make you move your home. And now that we're entering an environment where rates are higher, say you fixed 12 months ago for 3 years and you got, 3%, you're going to be jumping up to, say, 5% on your main home loan. So it'll kind of counteract that benefit.
But if you were rolling off anyway and then deciding, which bank am I going to use? For some people, this will be quite attractive.
Absolutely.
Now, it is important to note that that doesn't mean that ANZ and Westpac aren't doing other types of cashbacks as well. It's just that they don't have a specific promotion around them right now. Now, let's just talk about how that compares to a more standard level of cashback we would expect. It seems to be that about 0.7% as a cashback is pretty standard in New Zealand. I mean, that's according to both interest.co.nz and Money Hub, which is another money-related website. Would usually see somewhere between an 0.1% and up to 1%, but 0.7 as that kind of average. So if we think about say a $650,000 mortgage, you're looking at about an extra $2,000 under these new promotions that are coming out from BNZ and KiwiBank, where you're talking about getting a 1% versus an 0.7%. What does it actually mean for you? About a $2,000 difference if it's a $650k mortgage. So, pretty attractive. But there are pros and cons to using cashbacks. Andrew, walk us through what those are.
Cool. So the pros are, you got the cash, the money's in your bank, you can use it for whatever you want. Usually people will use it to, again, contribute towards their legal fees, valuation costs, if it's investment property accounting fees, all those setup costs, so it's less money that you actually have to pay yourself. The downside is there's a clawback period. So normally that's between 2 and 4 years. So what that means is if you take your mortgage and you move it away in a couple of years because KiwiBank are offering a better rate now and you're with BNZ, you're going to have to pay that money back, or at least some of that money back. So something to be aware of, because it catches people out. And generally speaking, you might end up paying a slightly higher interest rate or not being able to get quite the same discount if you're getting a larger cashback.
And so it's worth comparing the interest rates you're being offered from different banks against the cashback again. Let me just give you some blunt numbers. Let's say that you go to Westpac and they offer you an 0.7% cashback, and then you go to BNZ and they offer you 1%, but you've got to stick with them for 3 years. Well, if Westpac's interest rate was 0.1% less than BNZ's or lower, then in that case, actually going with Westpac is the better option because over time, the difference in cashback is negated by the lower interest rate. Now, you might be wondering, well, are the banks doing this out of the goodness of their heart, or why would a bank start? No, absolutely not. Only a former banker would say that. What this really represents is a change in bank competition at the moment. So what we are seeing is because fewer people are buying houses and we're seeing the volume of properties sold decline, and on top of that, people are taking out slightly lower mortgages because house prices have gone down a wee bit since November. Because of that, what are banks having to do? There aren't as many new loans being written because people aren't buying as many properties. So they're having to take business from each other. They're trying to pilfer from each other's loan books. So Westpac's written a mortgage, 5 years down the track, BNZ's got to try and take that customer, refinance that lending over into their loan book, in which case they start earning the interest on that loan rather than the previous bank. And so generally in a slowing mortgage market, you will see this more aggressive competition, not for people out there buying new properties, but trying to get people to move the mortgages that they already have. Sometimes
you also see banks introduce like a simplified refinance process as well. I remember BNZ years ago had a really short form application. So if you had your mortgage and you showed that you made your payments for the last 6 months, they pretty much just refinanced it straight away without having to do income testing. Now, obviously, with triple CFA, we don't have that same sort of flexibility, but I imagine the banks will be being as flexible as possible to get mortgages across, because it is a hassle to change banks.
I think that's also why they're putting that incentive in place in order to get people to move across, because if you're watching the television at home and you see up to 20k cashback BNZ, you think, oh, gosh.
I could get a new TV with that money.
Or you might look at that and think, oh, for 20 grand, maybe I should go through that process. I think that's why we are seeing that change in the competition. Yeah. But also the other thing is that if you give them a cashback and somebody's locked in with you for 3 years, that protects against the risk that they're then going to move on. But the question I really have for you, Andrew, is are mortgage cashbacks worth it?
The short answer is yes, but they've got to be looked at with everything. So like you said before, you've got to look at the interest rate as well. You might have to look at your fees if there is loan fees associated with the loan type that you're taking out. But also being aware of everything in the market is really important, which is why we recommend using a broker. One thing that you might want to consider at the moment is the ANZ Blueprint To Build loan, which is a 2.76% discount off the floating interest rate, which is amazing. Getting 1% cash back from a bank versus getting 2.76% off, which might be, a couple of percent lower than the rate that you might fix for, is way better.
Yeah, depending on the interest rates, definitely could be. And the reason I really wanted to do this episode, Andrew, is not just to promote that, hey, cool, we've got some competition out there. You might be able to get some extra cash that you wouldn't have otherwise got, but simply to point out that only somebody who is out there writing loans with multiple banks, i.e. a mortgage advisor or a mortgage broker, is going to know what people are actually getting.
That's right.
Coming back to somebody might say, well, I want to go with BNZ or KiwiBank because they're the ones that are advertising these big cashbacks. Well, yes, they're advertising them, but it doesn't mean that some amount of cashback isn't available at either ANZ or Westpac. It's just that because they're not advertising what they're doing or what the size of the cashbacks they're giving, we don't know about it.
Absolutely.
Unless you're actually out there writing loans. And I think that is one of the big reasons why you want to be using a mortgage advisor as well. Now, let me ask you this. What's your best guess for how long this level of competition will last between the banks? And are we going to see more of this going on in the future?
I think you normally have it ramp up around spring. So normally you have the banks have their spring home loan campaigns. So probably expect a lot of price competitiveness then. And I'd say it'll probably carry into the new year because we have a slower market.
So why do they opt for cashbacks though, rather than just giving lower interest rates?
Because it's tempting. People go and you think, oh, great, I'll get some free money and then I'm going to go and use that for a new TV or a new car or something like that. It is very tempting.
I suppose the other thing is, if you think about it, let's say that you're locked in for 3 years and it's a $10,000 cashback. Well, that's $3,000 a year. Depending on how large your mortgage is, if they just gave you an interest rate discount, might not be that much. 0.1% per year, 0.2% or 0.3% per year. That's probably not as sexy as saying, hey, we'll give you $10,000 up front. And so really these are promotional tools in order to get us to move between banks. Not saying it's a bad thing at all, can certainly be useful, but it's probably not the main thing you're going to be making your decision on in terms of which bank you're going to go for. Let's wrap it up there, but please don't forget to rate, review, and subscribe to the Property Academy podcast. Really does help us get the message out to more people. And hey, if you're thinking of growing your portfolio in 2022, your next step is to come in for a portfolio planning session. Now, I won't chew your ear off about it right now, but tell you what, easy way to sign up for it. Pull out your phone and text the word PLAN to 5522. We'll give you a buzz, see if it's the right fit. For listening to the Property Academy podcast. I'm your host, Emmett Knight, and we're going to be back again tomorrow with even more daily insights, strategies, and tactics to help you get the most out of the use in the property market. Until next time.